It's Wednesday, the 13th of October 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Business confidence surges as the reopening boom kicks in. That's our main story today. Also this morning, Westpac wipes $1.3 billion off its bottom line as it cleans out its operations. Telstra and CSL hold their annual general meetings and are upbeat about the future. And the COVID news keeps improving. Then stay listening for Sean's chat to Johannes Smoros, the co-founder of a Finnish supply chain company that's just done a big deal with Coles. But first, Sean, business confidence has rebounded following announcements on the New South Wales and Victorian roadmaps to reopening. Great news.
It sure is. This is according to the National Australia Bank survey, and some of the hardest hit sectors, recreation and personal services, wholesale trade, retail trade, construction, have all reported a big rise in sentiment. Fantastic news for the economy. It could get even better. National Australia Bank estimated that New South Wales residents spent $100 million in retail outlets on Monday. That's the first day out of lockdown for New South Wales. That's about twice as much as the previous week. Now, business conditions, which is more about what's happening now than the future, did fall, though. Not really surprising given the lockdowns.
All right, Sean, let's do a couple of steps back. A bit of a 101 on business confidence. Why is business sentiment so important?
Well, it's a leading indicator of what's going to happen in the economy in coming months. If business is upbeat, they'll put on more workers, they'll buy more stock, they'll invest in capital equipment. And that has this multiplier effect on the rest of the economy. So business sentiment is a key indicator of how the economy will be travelling in a few months' time. Now, in the next few days, we get data on consumer sentiment, the building sector, and the all-important labour force. So by Friday, Michael, we should have a pretty good understanding of where the economy is up to.
All right, so big week then for the economists among us.
Sure is. Stephen Koukoulas will be delighted.
He will indeed. So how then did markets perform over the past 24 hours?
Well, the S&P ASX 200 closed down 0.3% to 7,287 points yesterday. Technology and energy stocks didn't do so well, while the healthcare companies outperformed. Alumina Limited's share price jumped 4.4% yesterday. That was the best on the bourse, and that's on the back of surging aluminium prices. It, like other base metal prices, are soaring at the moment. Coal prices keep rising. They've been aided by floods in China's coal mining regions. That's adding to supply pressure just as cooler weather in the Northern Hemisphere kicks in. And iron ore prices have been running again. From about $230 a tonne in May back to $90 a tonne last month, they're back beyond $135 a tonne this week. That's helped the local iron ore miners with BHP, Fortescue and Rio Tinto regaining some ground in recent weeks. But generally the view among analysts, I must say on iron ore at least, is that it will bounce around these levels or perhaps a little lower for a while.
Okay, what about overseas markets? What's happened overnight?
Well, the September quarter earnings season on Wall Street is about to kick off, and that's grabbing attention. Investors will be closely watching, particularly for inflationary pressures in the economy. All the major indices in early afternoon trading were flat. It was the same in European markets with little movement.
We'll be back in a moment with the rest of the day's business news. Sean, there's plenty to talk about this morning. Westpac, the country's second largest bank and fourth largest company, has said its profit will take a $1.3 billion hit due to heavy write-downs. That triggered a 1.7% drop in its share price yesterday. What's going on there?
Well, the bank said it needs to take on extra provisioning for potential legal action and customer remediation from the Royal Commission, which of course handed down its findings more than 2.5 years ago. There could also be a new regulatory issue in the bank's life insurance business, which it sold to TAL in August for $900 million, and that relates to the disclosure of premium increases. And the bank's also winding down its institutional division, and that means writing down its value. It's all part of the bank's efforts to clean up and simplify its business, which has clearly gotten too complex. Credit to them for that. But sorting through the damage 30 months after the Royal Commission has made its findings makes you wonder just how long the fallout will continue. The bank's expected to make about $6.5 billion for its financial year, which ended on 30 September. So $1.3 billion is not an insignificant number on the bottom line. One other thing that's interesting, National Australia Bank's shares has outperformed Westpac considerably and is just on the cusp of taking over Westpac as the country's second largest bank and fourth largest company.
Now, Sean, there are a couple of big annual general meetings yesterday. Telstra held its AGM for its 1.3 million shareholders. It was a virtual event, and as we mentioned in our newsletter yesterday, if any company is going to be able to hold a virtual event for 1.3 million shareholders and have the bandwidth to do it, it should be Telstra.
What a lovely pun. From all reports, Michael, it went ahead without a hitch. Let's hope so. At the meeting, CEO Andy Penn said reopening plans around the nation were too conservative, and he called on leaders to talk more courageously about the reality of living with COVID. The chair, John Mullen, said staff will be allowed to work flexibly from home or the office, even as the economy reopens. And very importantly, for those 1.3 million shareholders, the telco giant plans to keep its dividends stable as it pushes ahead with its cost reduction program in coming years.
And CSL, I think, also held its AGM yesterday.
It did. The chair of Australia's second largest company, Brian McNamee, said he was confident the blood plasma group would return to sustainable growth in the next couple of years. He said the company will mandate vaccinations for all its workers in the United States and Australia. That's the biggest company to do so thus far. CSL's main business is pretty simple. It's to collect blood. But it's been hit by lockdowns and fears around the coronavirus, and collection volumes were down 20% last financial year. Its share price has been treading water since the beginning of last financial year. At least yesterday's news was welcome, and CSL's share price ended up 1.7%.
Now, Sean, the COVID news keeps getting better, which is really a big relief to pretty much everyone.
Especially Victorians. The Chief Health Officer of Victoria, Brett Sutton, yesterday said the high levels of vaccination in the state could bring the 70% coverage date forward by 3 or 4 days. That means reopenings could occur late next week. Victoria recorded 1,466 cases yesterday. That's down from the peak of almost 2,000 cases on Saturday. Around 86% of people over the age of 16 in the state have had one jab, and around 60% are fully inoculated. But it's not all good news. The state will begin closing down non-elective surgery from tomorrow as it copes with rising COVID hospital admissions. New South Wales had a welcome fall in case numbers yesterday, down to 360 cases. That's the lowest since the 11th of August. The Premier, Dominic Perrottet, said the major CBDs will be the focus of the post-lockdown recovery.
And the ACT had another 28 cases yesterday, but the lockdown in the Capital Territory will end tomorrow night at midnight.
Great news for anyone living in Canberra. What I find amazing is that authorities expect 99% of people in the Territory will be fully vaccinated by the end of November.
That's extraordinary.
Very compliant bunch.
Certainly right.
The Tasmanian Premier also came out and said he'd consider reopening his state shortly. And in Queensland, the Premier, Anastasia Palaszczuk, said 12 Bunnings stores would offer vaccinations. I prefer a sausage sizzle, I think, Michael.
Yeah, me too.
Anyway, Queensland has a relatively low vaccination rate with 70% having received one jab and 53% fully vaccinated.
Sean, we like talking about gold on Fear and Greed, and Newcrest Mining, the country's biggest gold producer, a major player in the copper world as well, has been under the gun in recent years. Gold production has been falling, notwithstanding Newcrest mines are actually very efficient at getting it out of the ground.
Yes. Yesterday, Newcrest released its long-awaited growth plan. Now, the group's been considering investing in projects in Australia, in Canada, in Ecuador. It said the bottom of its gold production cycle was likely to be 2024 before new projects kicked in. The group expects to be the lowest cost gold major by 2030, which is quite an achievement. Now, CEO Sandeep Biswas said pre-feasibility studies across 3 new gold and copper projects in Canada, Papua New Guinea and Australia have indicated compelling rates of return for both parts of the business. Newcrest really wants to expand its copper resource, very confident about the prospects of that metal, and of course that adds to diversification for the group. Analysts generally like the announcement, and Newcrest's share price rose slightly yesterday. Mind you, it's down nearly 25% over the past year.
Sean, what's making headlines in today's news media?
The Financial Times is reporting this morning that the International Monetary Fund has warned that the global economy is entering a phase of inflationary risk, and central banks need to be very, very vigilant and take early action to tighten monetary policy should price pressures persist. The IMF also said Australia is in a strong position to benefit from the huge increase in demand for so-called critical minerals, worth $13 trillion over the next 2 decades as the globe races to net zero. It says nickel, copper, lithium and cobalt are the top 4 energy transition metals. The Financial Review is reporting that up to $3 billion in incentives will be on offer from the New South Wales government as part of a new strategy for hydrogen in the state that the government expects will help attract more than $80 billion in investment in clean energy by 2050. The Fin is also reporting that early childhood educators will get pay rises of up to 13% at the start of the new year after the Fair Work Commission said the industry's minimum rates no longer reflect their levels of training and responsibilities.
Running through some of the other stories around today and the underworkings of the Victorian Labor Party all being laid out in the IBAC hearings in the state, with Premier Daniel Andrews yesterday saying he didn't expect any more ministerial resignations. That follows Luke Donnellan stepping down on Monday. It is starting to hurt federal Labor leader Anthony Albanese, though, who yesterday was ducking questions about branch stacking. It's not a good look.
It is not. The boss of Santos, Kevin Gallagher, has warned that the energy crisis that's hitting the United Kingdom and parts of Europe, as well as China, could soon reach Australia. He said it was almost inevitable that gas prices for manufacturers will be rising. AGL Energy CEO Graham Hunt agreed that the gas price increase would inevitably drive up wholesale power prices as well. The two were speaking at the Financial Review's Energy and Climate Summit.
Scott Morrison will attend a virtual G20 meeting of global leaders on the situation in Afghanistan. The PM said nations need to be coordinated in their approach to the struggling country and should demand that the Taliban regime doesn't let Afghanistan become a safe haven for terrorism.
China's lodged a formal complaint with the Morrison government over comments made last week by former Prime Minister Tony Abbott in Taiwan. Mr. Abbott called China belligerent and a bully. A spokesperson from Beijing called the former PM a failed and pitiful politician, always colourful, and the comments had violated the One China principle.
And finally, Sean, how about this one? A mansion in Lansell Road, Toorak in Melbourne has sold for more than $40 million over the weekend. That makes it the most expensive home sold at auction in Australia, the second most expensive property to be sold in Victoria. Mostly these kinds of prices are done via negotiation, not at auctions.
Nice outcome for the sellers.
Yeah, certainly is. Now, what's the key overseas news this morning?
Well, Chinese authorities have started inspecting the nation's financial regulators, biggest state-run banks, insurers and bad debt managers, as Beijing tries to stamp out corruption. The Central Commission for Discipline Inspection will accept whistleblower complaints and should report by Christmas. I'm sure there's a few nervous bankers around China at the moment. COVID cases in the US have been falling, triggering hopes that the worst is well and truly over. New cases are down 22% in the US in the past 2 weeks, and hospitalisations are 20% lower. The pace of deaths has also slowed. Across the United States, there's been 44.5 million recorded cases of COVID-19 since the pandemic began, and 714,000 deaths. Globally, the figures are 238 million cases and 4.9 million deaths. And finally, Michael, boys and their toys, or maybe egos. There's a bit of a spat going on between Elon Musk, head of Tesla and the rocket company SpaceX, and Amazon's Jeff Bezos. The updated Bloomberg Billionaires Index valued Musk at $222 billion and Bezos at just $191 billion. That's numbers 1 and 2 on the list. Mr. Bezos tweeted an article from 1999 that criticised Amazon and predicted its demise. Mr. Musk responded with a silver medal emoji.
It's all a bit petty, isn't it?
Oh, it's ridiculous.
Next they'll be comparing the size of their rockets.
Let's leave that.
Up next is the daily interview, and today, Sean, you're speaking to Relics Solutions co-founder Johanna Smoros.
Yes, Johanna calls herself the supply chain queen, and she's exactly that. She's recently done a deal with Coles. Supply chains are so important around the globe at the moment. Well worth a listen.
Yeah, it's a good interview today. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Enjoy your day, Michael.
It's Wednesday, the 13th of October, 2021. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook. And remember to sign up for our free daily newsletter. That's at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.